Hi, I'm Rick Kent with Creative Insurance Solutions with another video that I have created that has to do with Affordable Care Act plans, and in this video we'll talk about subsidies. As I said in an earlier session, subsidies can only be applied to on-exchange marketplace plans. If my client is not eligible for a subsidy, I can help them consider plans both on and off the marketplace. Because if someone isn't eligible for a subsidy, there's no reason to restrict their choices to on exchange plans. If they're uninsurable, their choices are limited to Affordable Care Act plans, but there may be an off-exchange plan that is less expensive or has a lower premium and deductible. But in this session, we'll deal with subsidies and considerations for those that are eligible. It's important to note that the actual name for a subsidy is premium tax credit. A subsidy will become taxable income the following year on its tax return. Let's say, for example, someone qualifies for a $300 a month premium tax credit, and the plan began effective January 1st, 2014. In early 2015, they'll receive a document from the IRS showing a $3,600 premium tax credit for that year. That must be factored into their 2015 tax return. The premium tax credit is based on the modified adjusted gross income, which is line 37 of one's tax return. Now, I never offer tax advice, nor should any other insurance agent. But any concern about how someone's specific modified adjusted gross income should be calculated should be directed to a tax professional. The amount of subsidy is determined by someone's modified adjusted gross income relative to the federal poverty limit. Here you can see the federal poverty limit income amount table, but it's also easy to find through a Google search. There are two levels of financial assistance with the Affordable Care Act. They are subsidy and cost sharing. In addition to the premium tax credit, commonly referred to as a subsidy, one may also qualify for cost sharing. The subsidy can be applied directly to the monthly premium, reducing the premium due each month by the insured. Cost sharing reduces the insured's portion of a plan's deductible and co-insurance. An individual or family qualifies for financial assistance when their 2014 modified adjusted gross income is projected to be from 100 to 400% of the federal poverty level. Those who expect their modified adjusted gross income in 2014 to be between 100 and 250% will qualify for both a subsidy and cost sharing. Those who expect their 2014 modified adjusted gross income to be between 251% and 400% will only be eligible for a subsidy. Subsidies and cost sharing can only be applied to on-exchange marketplace plans. And although subsidies can be used to reduce the cost of any bronze, silver, gold, or platinum plan, cost sharing can only be applied to certain plans. I help my clients choose plans that allow them to apply for both benefits if they're eligible. Although I'll discuss subsidy eligibility for employees in another session, generally, if one has access to health insurance through an employer, they're ineligible to apply for a premium tax credit on the marketplace, even if their income makes them eligible. they are required to enroll in their employer's plan or find coverage from another source for their insurance needs. If I can answer any other questions, please feel free to contact me at 770-932-0303, or you can email me at rick@scorecis.com.